Hello and welcome to Big Deal. Today we have with us Sunil Kaul, the Managing Director at Carlyle Group Asia, right here with us in the studios, traveling from Singapore. Now, Sunil, so good to have you in our studio here. And lots happening in financial services sector, of which you are an expert. You have made several investments in India in this particular space and some big returns also in the past for Carlyle Group from this sector. Now, first, looking at the financial services space on the whole, which is so interlinked with the central bank actions across the world. Now, bond yields have also created a fair bit of chaos in the global equity markets and has its impact all across. And on the other hand, the economic concerns that are prevailing around inflation and high interest rates. Putting all this together, how do you view this sector and the global trends in this space?
Well, thank you for having me, first of all. Look, I mean, at the end of the day, financial services generally, and certainly in emerging markets, but generally is a proxy for the economy. Yes. So the question that you're asking is really about the economy and what happens. And, you know, you can probably have a range of different predictions, but the reality is that globally, it's a difficult time. Yes. Okay. Now, whether it's hard landing, soft landing, you know, we can debate. But the reality is that inflation is a problem. Interest rates are likely to remain high for a period of time, which is not something people are used to for a long period. Yes. The geopolitical situation is a little unsettled, whether it's Europe, whether it's China versus US, and so on. We haven't, because of the COVID-related disruptions, people are looking at reorienting their supply chains, and that creates cost inefficiencies, puts more pressure on inflation and costs and so on. So it's not an easy environment, and when you kind of, put it in the context of elections in key markets, the US, obviously India, Mexico, UK, Taiwan, all happening in the next 12-15 months, it creates a whole bunch of uncertainty. The net direction is that there is a level of stress that is building up in the system.
So which side of the argument are you on about the economic slowdown in the US?
Well, it certainly will be a slowdown. Now, whether it will be X or Y, frankly, it depends on so many factors. If they can't, they're struggling right now with even getting the budget approved. Yes. So that creates uncertainty. And even though probably they'll finally do it, as you saw with the debt ceiling, for example, and these uncertainties in this kind of time frame, environment, are not helpful. Yes. Now, whether it goes here or there, it depends on so many random factors. But I don't think that there is any doubt in the fact that there will be headwinds. And it will be further complicated in terms of the politics of it because of the elections, because, they will want to take advantage one way or the other. And so it's a little murky, isn't it? So
political risks, geopolitical risks, these are two very important events for the economies and the markets. Now, a lot of investors are pinning their hope on the turn in the interest rate cycle. Now, looking at this space so closely, again, what's your view on that to happen? Because a lot of euphoria will come back to the market only on the timeline of that. Because as you said, the absorption capability is right now there because of the liquidity flush that we saw. But then if the interest burden is there for too long, the absorption capability will wane off, and therefore the liquidity situation can get tighter. So before that, the turn has to happen.
Yeah. Look, I think the question that you're asking is basically what would drive a downward correction in interest rates?
The turn.
And it seems at this stage, it's difficult to see very compelling factors that will lead in that direction.
Fair point made. And what is the impact of all of this happening in the world? Because India has been a beneficiary of liquidity flush that came in earlier. And now it will see the downside of what is happening across the world. What is the impact that you see on India, and especially the financial services sector, which gets hit hard if the economy is impacted in any form?
Well, look, I think first of all, it's relative. India is relatively doing well, and to the extent that investors have to make a choice, and if India is an attractive destination, so even if things are looking kind of murky, but India is doing kind of well, so you benefit from that. Yes. But I don't think we should get carried away. The reality is that if there is significant stress in the global system, we are not an island.
Yes.
We are a large economy. We are connected. The investors, global investors, are sort of influenced by what's happening. So any persistent problems elsewhere, coupled with high interest rates, which therefore gives people an option not to take the currency risk, not to venture into riskier equity investments and so on. So I think capital flows, particularly from foreign investors, there will be a higher threshold. And the good thing, of course, is that India has a lot going in its favor, which therefore means that it might be easier to cross the threshold, but it will be a little harder than it was, maybe a year ago or 2 years ago.
So given this scenario, how has Carlyle's view, your view, changed on India over the last few months?
We remain, well, I don't know about last few months. I think over a period of time, our view on India has been very bullish, very strong. We don't look at things from a 3, 6, 9-month perspective. We're not a portfolio investor in and out. We don't trade securities. We believe that if you look at the sort of the underlying dynamics of the market,
yes.
The demographics, the very strong financial system. I think RBI has done an excellent job in making sure that the financial system is robust, capital adequacies are okay, a stable political environment, this fantastic digital infrastructure that we built around the India stack and so on. The fact that from a geopolitical point of view and the emergence of this multipolar sort of construct, India is becoming a key player. Yes. Reasonably strong relations with a whole bunch of large economies around the world. So I think India is very well positioned. We have believed that to be the case.
Yes.
And as our incomes increase, what is not immediately apparent
yes.
is that it's not just a question of per capita going from $2,000 to $2,500 to $3,000, but the spread of income
yes.
is also important, because if you look at this first tier, second tier, third tier, as they move into, incomes go from $5,000 to $10,000 per capita to $20,000 per capita, the kind of needs you have
yes.
change dramatically. And
yes.
so you see increase in demand for consumer durables, you see increase in demand for wealth management products, health insurance products, yes. Travel, education, whether in India or overseas and so on. Yes. So there is a discontinuous change
yes.
in the consumption of these products. And that's the opportunity for India.
That's right. That's what you are keenly looking at. But Sunil, you have invested about $1 billion in India.
Lot more.
But currently you have Yes Bank as well as PNB Housing Finance. What's more on your radar right now, and how much more are you looking to invest in the next 1 year or a shorter time horizon?
Yeah, look, we are, first of all, we don't actually go with a certain amount of investment in mind. As I said, we're not a portfolio investor. We don't say we allocate this much here. Over a long term, we probably have some level of portfolio allocation, but not on a deal-by-deal basis. For us, the critical piece is that if we can find a good opportunity, and as I said, we are very bullish on India. And India is an economy where financial services sector will be critical. And I think RBI yes. is a fantastic regulator, which gives us a lot of comfort on the predictability of how these investments will pan out. So we look at good opportunity, good management teams, a good partner, if we can find one, and most importantly, whether we can make a difference.
Yeah.
If we can add value, if there is a way for us to make 2 + 2 = 5, then we will invest. And obviously, we have to be sensitive to valuations and so on. But for me personally, what I've seen at our firm is that the critical piece is the business something that has strong fundamentals?
Yes.
Is it a good management team or a team to which we can make some additions so that it becomes strong? Are the values that we have shared with the other stakeholders, and can we make a difference? Can we bring our global platform to work? Can we bring our ability to the analytics around data and so on, or our experts, our senior advisors and so on? So if we think we can make a difference and drive the business forward, we will invest. And it doesn't. We're not limited by a certain quantum or a certain cap.
All right.
I know, if we reach 4 billion, 5 billion, maybe that question becomes relevant. I'm talking financial services because overall we invested more than 6 billion in this market.
That's right. And I will pick your brain more on the themes of the financial services that are interesting to you. But that's after a very short break on Big Deal. Stay tuned to CNBC TV 18.